Well, 2025 is off to a hot start, and it's been an interesting few weeks in the U.S. political realm, as all eyes have turned to Trump in the last week. There's definitely anticipation and immense expectation for what is coming next. Recently, we've heard it all, from bringing back jobs in America, cuts in government employees, crazy stock market predictions, tariff talks, and of course the usual immigration debate that Trump himself claims has already been, quote unquote, handled. But let me ask you this. Do you really think just one person, whether it's Trump, Elon Musk, Jeff Bezos, or whoever the next trending personality may be, could be exclusively responsible for shaping the massive forces that shape our world? Spoiler alert, they can't. No matter who is in charge, the megatrends in the US will always remain unchanged. Welcome to the channel. If you're new here, I'm Kevin, and my mission is to give you actionable insights to navigate markets, build wealth, and make smarter financial decisions. So, if you're wondering what these megatrends are in 2025 and beyond, here's how I see it. Number one, we'll continue to see the persistent stride of the global competitive market. Number two, AI and robots will continue to transform the workforce and make manual labor extinct. Number three, the continued rise of all things crypto. Number four, wealth inequality as a result of technology and AI, allowing entrepreneurs to create massive businesses with just a few employees. Number five, the need for universal basic income or some type of universal basic living wage. And finally, a switch to a completely digital economy where people are living, working, and spending almost their full time online. In today's video, we're going to discuss the emotional expectations Americans have from the new government, the actual policies and their impact, and some continued 2025 expectations. Let's get into it. First, let's discuss something not many want to accept. The middle class in America is stuck. There isn't an actual driving force benefiting them anymore. If we think about it, they're being hit from all sides. From having to deal with intense competition, not only from overseas, but also from automation and robots, to tackling inflation. It's a nightmare for the middle class. Even major brands like Pepsi and Kraft have participated in quote-unquote shrinkflation as a result of cost pressures. Regardless of this, Trump's voting base is still expecting that we will roll back the clock to a time when wages were high and the middle class was flourishing. However, realistically, turning back time just isn't possible, mainly because policies such as tariffs, boosts in the stock market, or the rise of crypto are all essentially inflationary. Even if they go back to printing money using quantitative easing method rather than the quantitative tightening method, it's still inflationary. Just take a look back at history. In the 60s, printing $1 billion was unimaginable. Some might even say it was laughable. But in 2008, we printed $1 trillion during the radicalization. By 2020, this amount surged to $10 trillion. In such a situation, rolling back would mean removing all that money from the system, which would cause a financial collapse we have never seen before, comparable probably to the Great Depression. Clearly not something that'd be favored. Now, what does all this mean? Basically, inflated pricing is here to stay. Unless a miracle happens and there is a deflationary crash, which I would put at less than a 1% chance, inflation is not going anywhere. So if you're wondering what to do about this issue, the answer is simple, but not easy. You have to regain control somehow. Couple ideas for you. Number one, start up an e-commerce business that targets an expensive, consumable product and instead offer a low-cost but still decent quality option. think of something like a refillable luxury lipstick. Secondly, build equity and obtain assets, whether it's through investment, real estate, or business. In the world of inflation or stagflation, assets are king. Finally, understand that your W-2 salary will most likely not be able to keep up with the growth in asset value. The only exception here would be a job, like on Wall Street, where big promotions are likely to increase income quickly in your mid to late 20s, but not so much beyond that. So again, your best bet is an e-commerce store. Again, I would recommend thinking something beauty related. Selling to women is always the best way to go. And especially try to keep it as a consumable where returns are nearly impossible after use. A few other ideas. Another good option would be in the stimulant or recovery market, or becoming an affiliate in the casino or gambling market, as that industry is set to boom the moment policy realizations set in during Trump's administration. The bottom line is, there is no magic bullet that will fix the problem the middle class is facing. Even if it is out of necessity, it is better to become an entrepreneur than slowly being wrung out of the game. So will you adjust the situation, or will you get left behind? Let's get into part 2, actual policies and their impact. The next thing we need to consider is whether we are on the verge of an economic transformation or if we're merely running in place. Let's analyze this a bit. From tariffs to crypto regulations, even Elon Musk is getting involved. What should the average American expect in the future? Starting off with crypto deregulation. This policy has got us wondering whether Bitcoin will dominate once again, or are the altcoins going to take over? In my humble opinion, it'll be the alts in 2025 that will benefit from the deregulation. The US is already in control of plenty of Bitcoin via the private equity giants, ETFs, and BlackRock. However, since altcoins are, again, worried about being compliant, they stand to benefit the most from this situation of deregulation, where we assume they might even perform better than Bitcoin in 2025. This benefit will come from policies like staking yield for Ethereum ETFs and expansion of the real-world assets moving on-chain with know your customer token or address and a very clear decentralized finance framework. Bitcoin is already widely used, but the groundbreaking development, again, could be in the altcoins. But be careful. Exchanges are about to get hit with some strict rules regarding KYC, know your customer, and tax tracking. So pay your taxes correctly or risk getting involved with law and order. The next upcoming policy is regarding tariffs and automation. The question is, can manufacturing return to the US? A long time ago, the US sent all its production offshore so it could make its currency the king of global trade and use it as a weapon like it did against Russia. However, wanting to reverse that isn't as easy as it looks, and it won't happen simply by slapping on some tariffs. Competing with the cheap labor available overseas would mean the US has to invest a lot of money into robots and automating manufacturing processes. However, if they were to implement an automation strategy, they would be faced with the issue of displaced workers, which could lead to more protests like we saw late last year with the longshoremen strikes. And finally, the immigration policies, whether you like it or not, will probably favor the wealthy foreigner to maintain the strength of the currency. The likelihood of stopping the flow is also quite low, as that would result in the US economy being severely damaged. If you're thinking about Elon and Doge, Department of Government Efficiency, well, if the government layoffs take a similar route to what happened at Twitter, then expect some short-term pain and long-term uncertainty. What will happen when the something else that people are supposed to do after they have their government job taken away from them just doesn't exist? The tough part here is that the something else isn't all that clear. Most positions involve government paperwork. Removing those positions, similar to Twitter type and the mass cutting cycle we saw there, again, generally lead to periods of pain. Twitter had the same issues when it struggled for a period of time post layoffs. And again, if we assume that Elon implements the longer severance, that means the taxpayer still covers it with no work being done. The job market has more people looking into the private sector, and you get a fake understated unemployment number for about a year. All right, let's get into part 3, expectations for 2025. Let's dig into the future of the crypto market and where it's heading in 2025 and why we're delaying any big move in our portfolio for the time being. In terms of the crypto cycle, some people are saying that 2025 will see a big run throughout the year, similar to what we saw in 2017. However, others claim that it will peak in the first quarter. To be honest, I'm thinking it'll be somewhere between the two. While Trump might be great for crypto, all of it could be priced in too soon by the market. When talking about alts, I'm planning to make some opportunistic buys with Ethereum. Meanwhile, also keeping a close eye on the decentralized finance space, as with the Ethereum halving, prices could skyrocket again. For this year, stocks might be easier than crypto as we see a bull run through the mid-year, but we aren't so sure what happens in the later part of 2025. Increasing unemployment and elevated interest rates can slow things down, and the market could turn more cautious. Lastly, as we discussed in last week's video, the luxury market is set to flourish. Mid-tier homes aren't looking so good, but we're sure to keep an eye on the luxury real estate market. So where does that leave us? I don't see any big reason to add to your Bitcoin position. Rather, start taking a look at some of the altcoins. Ethereum staking probably comes in 2025, and a lot of the decentralized finance / value accrual projects will get bigger and better regulation. When Trump announces some sort of Bitcoin reserve, people will begin pricing in a quote-unquote global arms race to get crypto. However, that's a relatively low probability. There will likely be a good wave of news when he takes office. People over-index and over-leverage, and we go back to more realistic long-term targets versus the Moonboy chatter about $1 million Bitcoin price targets in 2025. All right, that's all for today. Let us know your thoughts in the comments below. Don't forget to like and subscribe. As always, none of this is financial or legal advice.